I'm Tammy Vindanger, host for Executive with a Cause. Today on the show, I welcome David Hubbard, founding director of CINCH Transform. Today, we're going to chat about the good, bad, and hard things about financial operations and not-for-profits. David, welcome to the show.
Hi, Tammy. Thank you.
We have a mutual contact. Suzette Bailey from Reno.io introduced us maybe a year ago.
Yeah, that was, time has gone so quick.
It really has. I wanted to share some of your expert knowledge, especially around accounting and finance, with some of our listeners for the not-for-profit space, because I feel like you have such a unique niche that a lot of people are not going to be aware that companies like you exist. So for those that are not familiar with CINCH Transform, can you please tell us more about your business and why you started it?
Yeah, that's a great question. So a little bit before CINCH Transform, I'm commercially accounting trained. We've got all the chartered accounting and followed the financial side of things, and then went into commercial businesses with that knowledge, manufacturing, mining, service-based industries. And then about 9 years ago, I decided to go into my own business, and I wanted to have more control around the organizations that we work with. And my aim when I started out in accounting was to help more people. And so 9 years ago, I had that opportunity to think about who I wanted to help and somewhat organizations that were close to my values. So I didn't necessarily like doing compliance, tax, that type of accounting. I wanted to talk to organizations and people about making a difference and how we can improve their, be more efficient, support their staff to be able to help more people. So in a way, I fell into the not-for-profit sector because I found that there was accountants in my area that were volunteering, but they, things started to get really busy for the not-for-profit sector. And they said, look, can you help this client out, as a consultant? And it grew from there. And I realized that this is really my people. I really enjoyed, they weren't interested around tax because the not-for-profits, the purpose is not profit driven. However, they needed to know how to run a profitable organization to continue to be sustainable. And they really valued what we were looking at in their business. And in the end, they can help more people and do more things. So that's what was driving me, and growing our staff. They're aligned with that same purpose around working with purpose-driven organizations to help more people. And it's very rewarding, from all this.
I understand you work with a lot of organizations in the community sector in particular. In Australia, we call it the National Disability and Insurance Scheme, which is a federal program that helps support those with some sort of disability. Do you want to talk about the type of clients that you work with in that space and how you do that?
Sure. We work across, most of our clients are in the National Disability Insurance Scheme, which is federally funded. And luckily, as I started the business, that program started to roll out. So in effect, they are disability providers who used to get grants and then provide services. So there was a lot of changes that came in, and organisations who continued to deliver disability services needed to understand their numbers, because those grants disappeared, and the people with disability were given packages, and the organisations had to claim from those packages to deliver service after they've delivered services. So cash flow became an important area which needed to be monitored, through to efficiency of systems, how many, capacity of staff, utilization of staff, through to the quality of care and service that they were delivering to the clients. So the type of organizations we were working with were organizations that were in allied health, working with, physios, speech therapists, occupational therapists, and they could deliver services to children right up to 65 years of age. After 65, they're classified as like aged care. It's a different part of the community services bracket. And over the last 9 years, it's working with people to support people with disability to live an independent life. And that support could be 24/7 at home with a number of people supporting an individual. But their goals might be to live independently in a 2-bedroom place with another one of their friends potentially, or to be able to communicate through assistive technology, and order things online. There's lots of different goals that the clients or the participants have, and we work directly with the organisations that are providing those services. And over the years, as the National Disability Insurance Scheme has rolled out, there's a lot of crossover into other community services, as far as covering housing, accommodation, independent living, increasing independence and participation for people to go out and live in the community and be part of the community. So it's all about inclusion. And we work with those organisations that support these people, because I've actually seen, and this is maybe some questions for later, but I've seen the benefits of an organisation managing that and helping more people. And I've also seen instances where the not-for-profits haven't been sustainable, and they've gone through a voluntary liquidation process, and the impact it has on not just the staff there and the families, but also the community and the participants. It's not where these organisations want to be. So we go into those organisations and understand how they're run so that they are viable and sustainable into the long term.
I'd like to go back and just reiterate how different this was and why cash flow has been one of the key drivers of your work. So initially, the grant, as you said, they received a grant and then they provided the service, so the cash was provided up front, right? The new scheme, which has been here for a while now, is that the client has a menu and they have the bucket and they get to pick off the menu. The provider provides the service, and then they have to claim after the fact. So from a cash flow perspective, when you used to get money up front and then distribute it as you need to, now you're getting reimbursed for costs that you might have already expended, for staff in particular. David, what are some of the key things that you find in these organizations that have to be done differently now to support that cash flow difference?
One of the things that the organizations need to be aware of is the cash flow is variable. Like in a grant funded environment, what cash is there for the next 3 months or 12 months, whatever. Under this type of model, COVID, for example, changed organizations' cash flow because in certain instances, they weren't able to deliver certain services. Or if the client falls sick and goes into hospital, and they're not able to deliver services, well, then they're not claiming. However, they're still employing staff and they're still managing an operation. So those sort of considerations need to be factored in to your cash flow. Now, how we factor them in is to look at your risks, but when you're doing a budget, it's also looking at the different versions of that budget. One of the things that organizations needed to look at was, the biggest cost, but also the biggest asset. The biggest cost in the organization is salaries and wages, so people. But the biggest asset is also people. You won't find it on the balance sheet, though. You'll find it on the balance sheet as a liability with employee entitlements. But what organizations had to do is really look at their people and understand how efficient are my workforce, because under this model, we have to operate within a certain cost framework to be able to make a profit out of what we were claiming. So it's really understanding, what does it cost us to deliver these services, given those variables and the efficiency of our workforce, and the price point that we have to deliver these in. And then doing modeling and translating that back to your cash flow. So in effect, it's almost like you're running a fee-for-service type of organization, whereas the model before that, under grants, you basically had a steady cash flow, no matter how many hours of service you were delivering, or whether there was, someone was in hospital or not, you had those grants. Whereas this model, there's so many more variables to think about.
And there were a lot of organizations that went under in the first couple of years because they couldn't manage their cash flow. What's a good example of efficiency when you're thinking about staff in this environment?
As far as efficiencies go, they needed to understand, I talk about capacity of the workforce, and we're talking about what's the capacity of your frontline workforce. And then understanding, if we've got this much capacity, how well are we utilizing our frontline workforce? And that means, of the capacity, how much time do we have available to actually deliver services, keeping in mind that our workforce will go on annual leave, sick leave, personal leave. They'll need time for public holidays and time to be spent on administration. And that leaves us how much time that they actually have available to deliver the services. So what we found is, or what we do is, look at how much demand there is, and then understanding how much capacity and utilization do we have in our workforce. Are we able to meet that demand, or do we have too many, do we have too many staff, or are our staff, can we improve their efficiency so that we get more out of the staff and meet the demand? So all of that has an impact on profitability, has an impact on cash flow.
I feel like we have to provide some specific examples for the listeners to really understand. So as an example, I have done one project, I think, for NDIS provider, or National Disability Insurance Scheme provider. They were providing home care services. So a staff member would actually go into the home, help support somebody who might need some help with cooking, doing laundry. They might drive them around, which is a totally different service, to go to the grocery store or something like that. And the time it would take to actually get them into the vehicle, into the store, back, and maybe drop them off somewhere else for therapy, perhaps. Each one of those was a different service, right? And then how would you find efficiencies in a case like that?
One thing we didn't mention is that under this type of model, the government has set the price, like they've set how much they can charge. So organizations can't not on everything, but organizations can't necessarily charge what it really would in a commercial market. The government has set the price. So effectively, if an organization wants to deliver these services, they have to deliver it within this price point to actually make it sustainable for them. So what organizations have done is looked at what participants demand, and then looked at the cost of delivering those services. So if there's been some really, really high needs and an organization is really not set up to deliver that service because it's going to cost them a lot more, they may have stopped that service and recommended someone else deliver that service for them, because that other service provider may deliver it more efficiently and therefore can deliver it within the price point and make it sustainable for them. But I say that with a caveat that a provider doesn't necessarily have to make money off every single service. So what it is about is the mix of services that they're providing. Some of them they will have to make money off because that will sustain any services that they're offering, which is a loss. So they really have to understand that position, and making staff clear on what ones and how they operate and deliver services will help the sustainability of that type of model. And then I guess the second part of that question is coming back to capacity. So once you understand the menu, the services you're offering, and the demand, then we need to know that we've got enough staff to be able to deliver those services, meet that demand. If we have too many resources or too many staff and not enough demand, then that's going to be a cost to your organization. So you either have to increase that demand somehow, or you need to reduce the capacity of those staff. And, that we're talking about people's jobs and livelihoods. But to make that decision, we need to also understand how well are we utilizing our workforce, and whether there is growth opportunities. So there's lots of different things.
It sounds so complex. I feel like I need to actually provide a non-NDIS example. So if you're running a restaurant as an example, and this is not to be, it's not to be disrespectful to individuals that are using that service, but just to try to provide an example that is a little bit easier for listeners to understand. If you have a restaurant and you have a special that everybody buys all the time, it's going to be cheaper to provide that dish. And because people are buying more of it, you can buy more of the same ingredients, and you always have it in stock, and therefore you might make more per item that's sold. Now, say you have a specialty dish that only one customer really loves, and you only provide, it has a special ingredient like a special rare seafood item that goes bad, is very perishable, and you always keep it in stock for that one customer. It's going to obviously cost you more, and if that customer doesn't come in, you've just had to throw that away. So that is actually more expensive to deliver that one-off product. So like I said, I'm not trying to be disrespectful to the people that provide these services or the people that receive them, but just to try to give our listeners a little bit of understanding of how things are delivered. For a not-for-profit or a provider of these services, what are the common things that you would tell them to take off the menu?
Initially, if an organization came to me and said, we're not going to be sustainable, we can see and we might have 12 months or 2 years, I would say, okay, look, there's these products that are losing you money. Is there anyone in any organization that provide these products that could also help this or service this customer? If the answer is yes, can you refer that customer to that person, or can you liaise with that organization and collaborate on delivering services so it reduces the costs to you? So I would look at doing that, because that's going to save you some cash flow. And it also, as long as the service is good, it's also goodwill to the client, because they're still getting what they need, and they're still potentially using you for other services.
Do these organizations have that much visibility over their per service cost that they can easily say that service is costing us money versus that? Or is it that they can see what they're getting per service from a revenue perspective, but because they might have staff that are working across multiple services, like in the previous example I gave, that they're not actually able to calculate that?
I think it's a huge challenge for organizations to really calculate their unit cost, because it varies from time to time. Like, there's a few variables, and the technology that they've got in there is not really picking up everything they need. So it might need someone to pull information from 2 or 3 different systems to actually calculate the unit cost. So they have clarity on the revenue side of things because that's fairly straightforward. But you're right. They don't have a lot of clarity over what it actually costs to provide those services, especially when people are across different, providing different services or different buckets of funding or different departments. And it comes down to how are the fixed costs being allocated across those different departments as well. So from a unit cost point of view, we're talking about those variable costs such as staff, and then or direct program expenses. And then there's the fixed costs, which might be how much does it cost you to run the back office or provide insurance, and how is that all allocated? So it can be a little bit tricky.
I had to run this cost accounting exercise once for a charity I worked for, and we literally had to count how long it would take on average to complete a task by a certain employee, and then figure out what their hourly rate was on top of that, all the benefits, to come up with a figure to say to do that particular exercise took 8 minutes on average for most of the staff of a similar skill set, and therefore that was costing us X amount. That was the only way to do it. I assume that that's how you'd have to do it as well, but maybe because they're providing it maybe in an hourly fashion, it may be a little bit easier. Is that right?
Yeah, absolutely. Like an hour would be the minimum amount of time. But it really, I mean, people don't like to do it because it does take a little bit of time and you've got to be accountable for your time. So we generally, if people don't know where their staff are really spending their time on, and we need that to determine what their utilization is, we call it, let's do a time and attendance for the next 2 weeks or the next month. And that data really helps you understand what the unit cost is, but also whether you've got capacity, or if you improved some of the administrative tasks, what impact that might be on the staff. They'll be able to see more people, I'd expect. But once you've done that and you've got that clarity, it's so much easier to make decisions going forward.
The technology that they do use right now, are there recommendations that you'd have for these organizations to put some certain things in place to make it more visible?
Yeah, some of the technology around the time, like in this community services space, it's time and attendance. So it comes from rostering. And one of the big things that if you've got a system that has a roster, which is what we expect the staff to do, and then you can compare that with what actually happened, that will tell you a huge story around whether we're meeting our demand. It'll tell you a story around what's the impact on absenteeism, what's on staff and the customer, and how efficient we are. Like, we said we're going to deliver 8 hours of service to Johnny, but we've actually only delivered 6 hours. So what did the staff do with the other 2 hours? Were we able to fill that with another client, or was it, do we reallocate it to admin or staff training or something like that? So having a system which obviously tells the staff where they should be in a roster, and then comparing a fortnight after it's done what actually happened, will help. As long as you can do that efficiently, it'll help you make decisions going forward around what's happening with time and attendance with our staff, with our workforce.
Do you have any technology that you'd recommend for doing that?
Look, there's lots of different systems, but what I'd recommend is doing a business requirements, understanding, are we delivering just therapy services, or are we delivering transport as well as day supports and things like that? Because there's all different types of software. So I don't necessarily have a recommendation because there's so many different pieces of software that comes out all the time. So what I would recommend is that organizations do a business requirements and then talk to someone like yourself in, what's the strategy, and someone to look at those business requirements and then say, well, here's 2 or 3 pieces of software that meet those requirements. And then you see, well, which one's going to give you the better user experience and which one offers the best training and support for you to be able to maintain that after it's implemented, and also that it meets your pricing requirements as well. What I do find in some organizations is you get some people coming in and they've put in new software, but then no one's really adopted it. It's either too hard. And what I find is they've spent lots and lots of money on software. And then I think it's the law of diminishing value or something like that. And after 2 or 3 years, people stop using it and you're not getting the most value out of it. So I think there's a lot of things that you need to consider, and it's what's going to be the best fit for you as an organization.
Well, for the short term, just for that exercise you mentioned in terms of trying to keep track of their time versus what they're actually rostered to do. Something as simple as Clockify, it's free to a certain degree. I can't remember how many users are free before you have to start paying for it. But for like a 2-week exercise, it's worth to pick up a cheap little software like that to have staff fill in. Obviously, depending on the size of the organization, a paper version would be just fine as well. And I just, I guess, trying to understand the baseline as to what that cost is got to be, as you say, the first step. And then from a forecasting point of view, like forecasting the financial systems out there are not generally good at cash flow forecasting. They can look at what's been invoiced, but they're not really good at forecasting beyond what's been invoiced. So what do you do for that?
Yeah, look, originally organizations would use spreadsheets, Excel spreadsheets, and that might be okay for some smaller organizations, or even larger ones, if that person is really in control of it. The problem I find, though, is that if you have one formula error, it could put a whole lot of things out, and the bigger your organization, the bigger impact that's going to be. What I use is some software that's called Magnify with an I instead of a Y. And what that allows me to do is it looks at the key drivers, so the key revenue drivers, the key labor drivers, and then allows me to put in the fixed costs. But it's also looking at our workforce. So I'm doing a projection, but I'm then looking at the efficiency of the workforce and assessing whether I've got enough staff. They might need to be 60, 70% productive. And then do I have enough to meet the demand? So we're measuring revenue, we're measuring the cost of our workforce, and we're also measuring the efficiency of our workforce. So that program allows me to do rolling budgets. It allows me to make some what-if changes, because that's one thing I mentioned earlier is, and in any type of environment, especially these days, it's not like a budget set and forget. We do have to revisit that target because things vary throughout the period, and this allows us to make some tweaks, to make some changes and say, well, what does that look like if I put on another 10 staff, or we amalgamate another business that's wants to merge with us or something like that. You can do those sort of models. Some other examples around the cash flow, I think there's some products, if people use Xero, there's some add-ons through the Xero platform that allow you to do some cash flow. But all the other cash flow software programs that I've seen don't look at capacity of your staff. They don't look at the drivers. They're just looking like you have to do calculations outside of the model, bring it in and see what the cash flow impact might be on that budget. But yeah, that's the one I use, and I find it's matching staff capacity with the actual revenue and costs, and then, putting that into a cash flow.
You've been using the word efficiency throughout this time, but another word that might be is just as well useful is in the consulting world, we always said utilization. So it's not necessarily a staff delivering it faster. It has to do with whether or not they're utilized for the full time they're rostered. And
that's right.
And that is what you're really talking about here is staff that you're paying for 8 hours. Are they utilized, being billable for the full 8 hours, or are they only billing clients for 6?
Yeah, that's exactly right. And it's understanding if they're not billing for 8 hours, for example, is it because every one of your billable staff are all doing 2 hours of admin time? And then if depending on the size of your workforce, you can then say, well, if I employ an admin person to do those functions, let's say, for example, staff were only billing 4 hours out of every 8 because they were spending the other 4 hours on paperwork that wasn't billable, or, training and answering phone calls and customer inquiries. If we had an admin team that was able to do that, what was the opportunity then for the frontline staff to increase their utilization and to do those billable hours? And it makes a real difference. And then you get to a point where your utilization is where it needs to be, and you say, well, we've still got demand. We've still got people maybe on wait lists, or there's still people in the community that we are able to service, but we just don't have enough staff capacity. So then you go out and you employ more staff, and what you'll find is your utilization might look like it's decreased until you fill up those, increase the demand, start delivering more services. So, and did I explain that one?
Yeah. But it's also, a tough budget thing, because every person you hire, you have to assume that they won't be fully utilized at that moment in time. So there is this transition period, and you don't know when you'll find good staff to hire, right? So it could take longer, It could take shorter. You have to grab them when you can. I think that's a common issue across all community sector that is delivering, whether it's childcare or it's aged care or disability care. Anybody that's delivering these types of services are constantly having to think about, when do I increase capacity, knowing that demand has to meet it at some point.
Yeah, that's right. And we do some work with some domestic violence organizations, and at the moment they're grant funded, but they've got the same issue when we talk about staff, workforce capacity, finding the right staff, how we're utilizing those staff. It's such a big challenge, and the work is quite demanding in all of these roles in community services. So a CEO or an executive team, if they had this information on what's the impact if I put on more people, if they get that wrong, it's going to be like, if they get it wrong because we're not utilizing our existing workforce, then that could start to impact cash flow significantly. If they have the information and they know what the utilization is, they know what the cash flow looks like, and then they are in a better place to make a decision, to put more people on, and they know, well, this is the demand, this is why we're putting those people on. If they've got eyes and clarity around that, they're going to make a better decision, and it's not going to impact the organization from a sustainability point of view, because it's something that they've already thought about and they can see, like through this modeling. And I've just seen a lot of organizations think, well, this is how we've turned some organizations around, is just by looking at utilization of their workforce. And it makes such a big difference by just understanding that utilization, because you may not need to put on more staff. You might just be able to improve their utilization, which means they can help more people. And it's not going to cost you any more money because you've got the same amount of staff. You're just utilizing them more. So you can help more people. And under a fee-for-service type of workforce arrangement, you're making more money. You're increasing revenue.
this is not complicated, is it? Like utilization rate can be done on a spreadsheet if you know what time they're actually spending towards a client. So
Yeah,
it's just having that one number, and that can make all the difference for forecasting.
absolutely. Yeah. And there's such a big difference between, a 5% difference between depending on the size of your workforce. That could be, 10 more customers that you can see in, a month or 2 months. And then you extrapolate that over time, and it just makes a huge difference. Now, I also would comment that we need to spend, like I said earlier on, our workforce is our biggest expense, but it's also our biggest asset. So I also believe that we need to allow time for when our staff aren't necessarily being in a billable role, but we need to factor in their supervision, professional development. It's the things that like if admin consumes 50% of their time, but then I would say that's not efficient use of, your frontline staff. But I do think that we need to factor in that they do need to do some admin, and they definitely need to do some supervision and professional development. But if you've got all of that in a model, even if it's on a spreadsheet, and you're really clear on, well, what is my utilization that's billable, then you know what size of workforce that you need to deliver your services. And then if you know the size of your workforce, then you'll know what it's going to cost you to deliver, you'll know what the staff costs are.
And I think the other part is what services to actually deliver based on demand, right? That was the other part of the equation. Do you have in your mind what an ideal utilization rate is, knowing that they do need time to do these other things?
Yeah. So an ideal utilization rate. If I take it back to a big picture, in a community services based organization, from a costs point of view, it's usually around 70% of our revenue is in workforce costs. But that's not telling us, well, what utilization are these organizations? If those costs are 80%, I think, well, they've got more people that are not being utilized. So what I'm saying there is that if their utilization is 50%, they're only using their staff 50% of their time, they actually do need more people to deliver services. But if we said that they operated at 80%, then you don't need as many people. So when I look at some of the numbers, I understand where they might be operating. But really, to drill down on what utilization is, it's time and attendance and, that sort of thing. And what I'm finding is, for the frontline workforce, certain services need to be delivered. The lower, say, the price guide, if I'm talking National Disability Insurance Scheme, where they've set the price, the lower the price, the higher the utilization of their frontline staff needs to be, which makes it very busy for those staff. But I'm talking about, if the price point's $60 an hour, for someone that you're paying $25 or $30 an hour for, if you add on or payroll on costs and some other things, they need to be 95% or thereabouts utilized to actually make any margin out of that $60. So if you're charging $200 an hour, your organization could afford for that person to be 70% utilized and still, make even or break even, make a little bit of money. So there's a few different, variables, but that depends on the price point. But I guess my message in this is, the lower the price point of the service that you're delivering, the higher the utilization of the person delivering that service needs to be. Now, I don't believe that anyone's going to be 100%. Even casuals need some sort of training and things, so they're not going to be 100%. So I wouldn't model anything on 100%. But the ones that are the price points higher, there's more leeway as to, and sometimes it's in the therapy area that their price point's closer to $200 an hour. So I see that they're not operating at 95% utilization. They're actually operating at, 70% is a good area where they seem to be operating.
And these people, because of their specialty skills, probably require more training. They probably have more admin to do, and they may be managing others as well. So that makes a lot of sense to me.
That's right. Yeah.
Okay. Well, I know that discussion we just had is probably quite complex, but for the organizations that deal in the community sector, I think that they'll understand that and understand the value of just that advice. Is there anything else that you'd like to just share with our listeners who may be in that space as far as what they can do better from a financial operations perspective?
What I would encourage people to do is just have a look at the information that is being reported to them, like to make sure that it is what they are after. Like if people if they're not aware of utilization, it's like, well, that's such a big thing, which will help make decisions. So have a look at your reporting and make sure it's reporting not just the numbers, but also, maybe staff turnover or absenteeism, or, how many clients do you have on a wait list? Those sort of things will help you make decisions on whether you should put more people on, whether you need, to look at efficiencies in operations. So I'd probably say review your reporting and make sure it's simple and it tells you everything around, like a dashboard on the key areas of your organization, because that's going to help, organizations in executive roles make better decisions. That's probably one of the things.
Great. Well, I know we're out of time. So, David, thank you for the advice and your time today. If more organizations want to reach out to you personally or to know about your services, what's the best way to do that?
One of the best ways would probably to jump on LinkedIn and connect with me on LinkedIn, send me a message on LinkedIn. And, I'm really active on LinkedIn. So that's probably the best way.
Okay. And your website is?
Website is www.cinchtransform.com.au.
Okay, great. David, thank you for sharing today. There's some real little gems in that conversation that if people could get their heads around utilization rate in particular, how much more efficient their organization would be and how much better their cash flow would be. So I think that one in particular, but there's a few other things that you mentioned that I hope people had been able to absorb, knowing how technical this conversation probably has been for them. So thank you for your time and thank you for the work that you do with the community sector.
Thank you so much for having me on there. And I know it was complex, so I do hope people do get some little nuggets out of that, because I know everyone that's probably listening is making a difference in our communities, and that's who we love to support. So thanks for having me on, and good hopefully, good luck to everyone that's out there. I hope it makes a difference to you.
Cheers. Hi, this is Tammy again. When I'm not doing podcast, I'm helping not-for-profits with IT decisions. The question for this week's IT in Plain English segment is, what's the difference between a data warehouse and a data lake? Both of these terms have to do with the way you might store data for reporting and dashboards, especially across multiple systems. A data warehouse is organized and stored in tables, kind of like what you see in a huge Excel spreadsheet. In a data lake, the information is stored in an unorganized way until you need it. To help you understand the difference, picture a bookshelf full of books. They're already sorted in multiple ways, such as alphabetically by title, author, or subject. When you want to find a book on the bookshelf, you just run one of those already defined searches, like all books written by J.K. Rowling, and it will come back with the results. This is a really fast way to find information, but someone had to first organize the bookshelf that way, which takes time. And if you decided you wanted to just find the books written before 2000, it would be impossible to find unless the publication date was visible. Now, suppose instead that all the books were stored randomly in a really large box, and you once again wanted to know all the books written by J.K. Rowling. This time, someone must go through the box to find them. This will obviously take longer the bigger the box. However, no one had to sort the information to begin with for searches that may never be needed. And if you wanted to find those books from J.K. Rowling with the color red on the cover, you could actually do that. That makes data lakes more flexible than a data warehouse, but again, slower to run reports. The storage method you choose will largely depend on a few criteria, such as how often the data is used and updated. So there you have it in plain English. If you have an IT question you want answered, feel free to connect with me on LinkedIn and send me a message. I just might answer it on the show. And if you like what you heard, please subscribe and leave me a review. To all of you executives with a cause, the world is definitely a better place because of you. Thank you for what you and your teams do every day.